Hello, everyone. Welcome to another Friday Live. I can't believe it's Friday. This whole year has gone by so fast. I know everybody says that over time, but it really has, for me at least. So welcome again. We are going to talk about something that I feel like comes up a lot, especially when we start talking about shifting markets and what's going on in our real estate market. And it's something that people bring up a lot. They always tell me, I'm waiting for this to happen, and when it does, I'm buying everything. And that's foreclosures and what's going on in our market. But before we get into it, I want to know, where are you watching from? So let me know in the comments. And as we talk, if you've got questions, make sure you put those in the comments because we will get to those questions for you. So to talk about this, I thought it was only fitting to bring on an attorney who knows a little bit about this. So Patrick, welcome back. You've been on here before. I love it. And you are the go-to when we start talking about, legal questions about this topic. So what are you seeing right now? Are you seeing a real uptick? And I'll bring up numbers here in a little bit, but are you seeing a real uptick in foreclosures, people coming to you that are kind of what we would consider distressed?
Yeah, that's a hard one, right? So
I know.
I'm sort of, there's maybe some more calls, there's maybe some more interest, there's maybe some more people talking about it. Sort of the what would happen if, or if I can't sell my house and I go and buy this other one, or I'm stuck here, what do I do with my house if it just continues to drop in value? So there's sort of this question out there of what do I do with my distressed property? Again, I'm not seeing a huge amount of people being, getting a notice of trustee sale recorded against their property or a bunch of judicial foreclosures, but there's some more discussion on it for sure. And so to say that they're increasing or not, I don't really have the official numbers, but we're at such a low amount. So, the media and the public are going to blow that out and say, well, we're double the rate, but the rate was still under 1% anyway. So
for sure. So let's look at these numbers here before we jump in any farther, because I think it's important to kind of show. So this is from the Confer Report, which I love. And this shows you back to 2014. And I'm going to jump back even farther, but this shows you the orange, the reddish brown shows you what actually reverted back to the beneficiary, and the blue is what sold to a third party. So here we are right now. So this was in April. So 34 homes actually reverted back to the beneficiary, and 33 actually sold to a third party. But whenever I'm talking about this, I always like to bring up the fact that, so here is 2020, right? And this is when we kind of hit COVID in March. This is when we shut down. And then we had a lot of time right here where there was forbearance. And we came out of forbearance right here. And everybody anticipated this gigantic swing up in foreclosures. And as you can see, it just didn't happen. But to your point, right, there is a little bit more of an uptick. But again, just putting things into perspective, I'm going to jump back a few years back in time. And this is what it really looks like. So this is what when I talk to people, that's what people remember. That's what people talk about. And that's what everyone feels like, oh my gosh, a housing crash is coming. This is what a housing crash looks like with foreclosures. And we are way on the right-hand side. So all things considered, it's not looking terrible, but we are seeing some home prices that are coming down. I mean, I've talked about this too, that, the number of price reductions is climbing. So tell me what your conversations are looking like with people out there.
Yeah. So we run into some people who are, we call distressed or have a distressed property situation. And I sort of define that as, hey, your mortgage or the amount you owe to your lender is greater than the what you could sell your property for right now. So that to me is a distressed property. It's underwater, it's upside down. And so when people come to me, they want to know, what can their lender really do here? What are their options here if they do run into a situation where they just can't sell the property and they don't have the money to sort of pay off the remaining balance? And the funny part is, when I first started my career, I was drafting loan documents for banks and lenders. And, there's all sorts of these horrific remedies that you put in these documents. We're going to take your firstborn child, and we're going to pursue this deficiency, and we're going to force you into bankruptcy. We're going to take your house, and under Arizona law, you're allowed to put that stuff in the loan documents. That's a very standard language throughout the country. But under Arizona law, there's only a certain amount of remedies that lenders truly, truly have. So it looks scary. It appears scary. It's intended to be like that so people pay their mortgages. But in some situations when people can't do that, or it no longer makes sense to do that, then they come to me and say, well, what's my remedy? Maybe they overbought during the COVID period. Maybe they got some 100% loan financing and they didn't have to put any money down, so they don't have any equity during that same period. Or they got some sort of FHA loan or VA loan where they didn't have to put down the 20 to 25% that's a little more traditional. So they're now at a point where they're really close to being underwater. Sometimes it happens when people have some issue with their property. There's a structural issue and they can't sell the property now because they have to disclose the structural issue, or they can't sell it for as much. And so then they become underwater in those, or distressed in those situations. So it happens. It's part of the market naturally. But we're just seeing a slight increase because people are getting a little anxious. Like, we're not moving this piece of property as quickly as we thought we would, or my real estate agent is suggesting I price it a little bit lower than I had hoped, and I'm not going to make as much money on this, or any money, or I'm going to have to come to the table with some closing. Yeah. So again, lenders going to put in all sorts of nasty stuff that they can do, but really they can't do much.
Well, and most of the things that I'm hearing about when it comes to the foreclosures are people that are in that situation and kind of leading them to potentially even a short sale, right? We remember those super fun short sale days that they bought within maybe the last 2 years. And to your point, just a minute ago, maybe they bought on an FHA loan where they only put down like 3 or 5%. And so now they're in a situation where they have to move, or they've lost a job potentially, something along those lines. And those are the people right now that I think are in the biggest kind of danger point. I don't know what else to call it. Kind of, they're in that situation where that's where you're going to be potentially not walking away with even being even.
Yeah, we run into that for sure. Those recent buyers who didn't put a lot down. We run into situations where people, they paid down their mortgage to for a while, and then they went and put on did a refinance, or they did a home equity line, and so they've used up equity there. We sometimes run into situations where people, try to do these creative seller financing deals and seller carry financing and those types of things, and they don't quite know what they're getting into, and then they turn around and say, well, we can't pay this seller who's also a lender back. What do we do? And so there's all these interesting situations for sure that are, again, always part of the sort of natural real estate market. But again, as you mentioned, there's some that the uptick is largely related to those from the last few years.
Yeah. I mean, because again, if you've owned your house for 5 or more years, the reality is that right now, if you put your house on the market, you're probably going to be okay. Would you make the same amount of money that you made last year? Probably not, but you're still going to walk away okay.
Yeah, no, I think that's consistent with what we're seeing as well.
Yeah.
So again, there is that subset, and we're seeing an uptick, and their questions are, okay, I heard I might not have to come up with some extra cash at closing if I do a short sale, or I heard that back in 2008, 2009, people would just literally walk away from their mortgage loan and walk away from their property. What does that really look like? What does that really mean?
So how do you answer those questions? Let's hear it.
Yes.
Yeah, I know I just sent somebody to you who was calling me about some of those exact questions. And they said, they actually got a property they inherited a property, and a family member is actually living in it, but they didn't realize there was a lien on the property from the HOA. And, so, it was a little bit more convoluted. But I get to that point and I'm like, you need to talk to an attorney, because I think they want to keep the property. I'm like, I think there's a way for you to keep it, but you need to be advised by an attorney, because I am not an attorney. And there's other questions that they need to be asking you to make sure that they're guiding you the right way. And I don't know all those questions, and I am not an attorney.
Well, I'm going to give you a quick law school education here, I guess, or you're going to get your honorary law degree after this.
Oh boy.
When it comes to real estate law, or when it comes to foreclosures anyway. So the first thing that I always get into is really, what can my lender do to me if I do a short sale, if I do a foreclosure? What really is going to happen to me as it pertains to the deficiency, the amount that I'm behind on this, the amount that I may owe to this lender after this thing closes or goes through foreclosure. So the deficiency refers to the monetary amount that I still owe to my lender, less the value of my property. So if I owe $500,000 and the property is worth $400,000, the deficiency is $100,000. Okay, so that's kind of what people want to know about. What happens to this deficiency? And in many circumstances, at least here in the state of Arizona, if you're in another state, you're definitely going to want to check on those laws. But at least with respect to many of the properties and many of the borrowers here in Arizona, the answer is the lender can do nothing. And that's a good thing. And so the things that I look for, and again, this isn't legal advice because each situation is very, very different and specific. The things I look for, there's three things I look for. Number one, is the property situated on less than 2.5 acres? Okay, great. That covers most residential houses. Number two, is the property utilized as a single family home? Yeah, hey, it can be a rental, it can be a vacation home, whatever. It is a single family home. It's not used as a business. The third thing that I look at, the third factor I look at, is how much of this money that you currently owe, this $500,000, was used to actually purchase the property. So purchase money. What is the purchase money amount? And so if somebody in that particular situation says, well, yes, it's a single family home. Yes, it's on less than 2.5 acres. And I never did a refi. Guess what? They've got some decent bargaining power when it comes to what they do. They can actually, in that particular situation, walk away, and the lender cannot pursue that deficiency because they've got anti-deficiency protection. So we've got a couple of anti-deficiency statutes that work kind of in conjunction with one another. But that's the first thing I look at is, can this lender pursue the deficiency? And for a lot of people, it's like, oh, cool, I can breathe again.
Sure.
If you have a second mortgage that was taken out after you purchased the property, not going to be protected. If you have a home equity line, not going to be protected. And in some instances, you may run into a situation where if you did do a refi, that extra cash out may also not be protected. But there's so many weird nuances to how these things work. It's a huge sort of tree of outcomes, of potential outcomes, if this, then this. But what I particularly look at are those three factors: single family home on less than 2.5 acres, and what was the purchase money portion here? And in many instances, the lender just can't do anything with respect to that deficiency. So what does that mean for a borrower? That means that the borrower, if they're not able to complete a short sale for whatever reason, then if the property goes to foreclosure, or if the property goes to a trustee sale, the lender can't pursue that deficiency. So really, we're looking at 2 or 3 options that the typical borrower is going to have here in the state of Arizona. They can either let that property go to trustee sale, they can do a short sale, they can also sometimes do a deed in lieu of foreclosure. Now, of those 3 things that I mentioned, short sales and trustee sales are the most common. And of those 3 things that I said, only one of those things is actually referenced in your loan documents, the trustee sale. So again, we're talking the lenders view short sales and deeds in lieu as an accommodation because it's not a typical or standard remedy that's included in the loan documents. But I'll get into, if you want me to, I'll get into what you need to do to protect yourself on a short sale as well.
Well, and I was just going to say, I remember back to the short sale days and doing, fighting with the lender that they have to write in the language that, there's no, literally, I remember.
Yep. No, I'm glad you mentioned that because let's say that borrower that we went over, the $500,000 loan with the that could sell for $400,000, and there's that $100,000 deficiency, and they've otherwise qualified for anti-deficiency protection. The lender cannot pursue that deficiency amount. Well, guess what? If that person goes and does a short sale, we don't actually know if that person if that lender is going to pursue them after the short sale closes, because our foreclosure statutes and our trustee sales statutes, they don't say a word about short sales, right? So we know that this is the outcome if there's a trustee sale or a foreclosure, but we don't necessarily know. There's really not any case law that says, hey, if you qualified for anti-deficiency protection, if you did a trustee sale, then you're fine on a short sale. So that's why we always said, no, we don't know if that's the case or not. Get language in your short sale approval letter. And when I'm reviewing that for somebody, I want to see two things. And one of which is what you mentioned. Number one, the lender specifically and in writing agrees to waive any deficiency. And then number two, lender agrees to release their lien once they get paid so that the buyer gets clean title. So yeah, that's why some people are like, I'm not doing a short sale because I don't want to have to go through that process, and it's a mess and it's lengthy. But I think there are some benefits in doing a short sale. Usually going to get a little bit more for the property, so that deficiency amount, if there is one, isn't going to be as high.
And you're not going to get hit on your credit as hard.
The credit, exactly. You're going to qualify usually a little bit quicker than had you allowed that thing to go to foreclosure with a trustee sale. And I use the words foreclosure and trustee sale somewhat interchangeably. They're two actually completely different things. So a trustee sale is the power of sale that the trustee has in the deed of trust, that they can sell the property on behalf of the lender. A judicial foreclosure is actually a lawsuit that is filed by the lender that says, hey, I haven't been paid and we want to pursue this property. So I use them interchangeably. A lot of people use them interchangeably. But
we really don't technically have foreclosures here because they're not judicial.
We do. We can. You can.
Okay.
You can. It's rare. So in my line of work, you see it in 1% to 2% of the situations where somebody's underwater. So it's allowed in the loan documents. It is a lawsuit. And when we see a situation, or when we're bringing a situation on behalf of a lender, usually to have to do a judicial foreclosure, it may mean like there's some error in the loan documents, or the borrower has some sort of defense. And so you want the court to give you some kind of intervention and oversight on this, whereas the trustee sale has none.
Well, and I remember, again, back in the short sale days, I remember talking about the different states that had different laws and how we would get through our foreclosures. And being in Arizona and being able to do as many short sales and do them, I mean, in the grand scheme of things, we could do them pretty quickly. I mean, some banks were worse than others. Trust me, there are times I'm like, oh my God, like what is going on over here? But some of the other states that are judicial states, and I mean, their backlog was just huge and they couldn't move through their foreclosures and their short sales really, really quickly. So, I mean, I think that was a good thing. I mean, as much as we took a 50% hit on our prices, no question. And Alex says, I hope Arizona has a huge correction before we decide to move down there. Yeah. I mean, I look at this and it's something that I talk about a lot right now because everybody's like, how much do you think the prices are going to come down? Do I think prices are going to come down a little bit? I do. Do I think they're going to come down a lot? No, I don't.
I think there's a lot of demand for people to move here. I think businesses here are pretty healthy.
Yeah.
And that's what I think we just didn't necessarily have that in 2007, 2008. We had a lot of people just coming here and speculating, whereas now I think they're coming here and actually, settling down and moving here. So,
well, I mean, back in 2007, 2008, even just before, like our top employment opportunities were hospitality, construction, and low-end call center jobs. That was it.
Yeah.
Our job landscape has drastically changed. I mean, I'm helping a lot of people move here right now, and they have, one of them's a physicist and the other one's a chemist. The other one, both of them are financial planners. Like they're not low-end jobs by any means. So it's that hard thing of people saying, the prices are too high. Nobody can afford them. And I'm like, but people really can afford some of them. I'm not saying that every home has to be, $2 million, but people can afford the homes. And no, they're not all just from California. I just want to make that very clear. Not everybody that's coming here and spending, $2 million, they're not all just from California. Some people are from Arizona. Some people are from other states. So I feel like a lot of places kind of get a bad rap about that. And then what what our home prices have done, and that it's all completely unaffordable. I get it that there are some people that are having a hard time affording it, and there's no question that, you know, our home prices have gotten a lot higher, and Arizona always was looked at as an affordable place to live that was still a great place to live, and it's not necessarily that anymore.
I agree with you. I mean, I've been here for 20 some years now. And so I've seen it. And one of the things that attracted me to Arizona was, well, you can get a really cool house and a pool and be out sipping margaritas and be paying less than $1,500 for your mortgage payment every month. And man, those days are just gone.
They are. And I mean, again, I look at it, I'm like, it's sad, because I think that I would love to see more people be able to buy a house. But I've talked about this too. I was listening to a really, really smart guy that has been in real estate for a long, long time. And he said, you know, everybody asks me right now in the market, like, is it a good time to buy? And he's like, my answer is this: if you can afford it, now is a great time to buy. If you can't afford it, don't buy. But if you can afford it, now is a great time to buy, because it doesn't matter. Look back at history. Between now and 10 years from now, you will be so glad you bought now versus in 10 years. Every time you're going to be happy. So it's that whole thing of, you know, you can wait and wait and wait, but you can't time the market.
Yeah.
When it's the bottom, you never know it's the bottom until it's out of the bottom. Same thing with the top. You know, everyone's like, I'm going to buy low, I'm going to sell it high. You never know. You just don't know.
I think a lot of people thought that in 2020 when COVID happened.
Oh my gosh.
I was like, oh, we're in this recession. Now we really need to start talking about this again. And
100%.
Complete opposite.
Yep. 100%. I mean, I remember I had a house on the market. It was under contract. World shut down. Buyers backed out. Clients were like, oh my gosh, what do we do? We just I'm like, let's just sit for, I just don't want to make any rash decisions, right? We just got to sit for a minute. We sat, we kind of waited to see what was going on. The buyers ended up coming back, got the deal together, and it closed. But I mean, I remember it was like, holy, what are we doing? I don't know are we all going to be shut down? Like, what is going on?
Yeah, it was bad. It was definitely
crazy.
bad. You know, the other thing that we kind of have going on right now, which is unfortunate, is we see situations where people go through foreclosure or a trustee sale, and then there are excess proceeds that are left over. So they're actually not in an underwater position. This happens a fair amount as well. So
really?
Yes. So let's imagine a situation where you're not getting your mail, or you think that you've been making these payments, but you're not really paying attention. Those types of things happen quite a bit. And let's say that you know, oh, I just got paperwork, whatever. It doesn't apply to me. It doesn't mean anything, whatever.
Sure.
And they end up going through foreclosure or the trustee sale process, and they have equity. There is a fairly big market of that happening.
So then what happens to that equity?
Yeah. There's what's called there's excess proceeds. So after the trustee has been paid, after all the attorney's fees come out, and et cetera, and there's still money left over, that money actually has to get deposited somewhere by that trustee. They deposit it with Maricopa County Treasurer's Office, and then there's what's called an excess proceeds lawsuit.
Oh my gosh.
Anybody who has a claim to that money, including the homeowner, has to basically fight for it. And so we've seen that happen as well, which is really, really unfortunate, because you've got equity. You could have sold this. You could have got more. You could have got paid right away. You didn't have to go through this whole foreclosure and excess proceeds.
So couldn't you find that out by going just to the title company and having them pull? Thank you.
Yep.
Yeah. I'm like, that seems like an easy fix.
And there are some real estate agents who I'm certain go to title companies to get those lists or to build that and see if they can try to sell, try to do those short sales, or not short. They're not even short sales. They're regular sales, because there's no deficiency. So that's an unfortunate situation we see. The other thing that people need to keep in mind is, and I'm not a CPA, but you know, there's the deficiency, which is the money, the hard money that you may be out if you go through this property, and that may be able, that the lender may be able to collect from you that $100,000 in that initial example that I provided. when a lender walks away from some debt or they can't collect debt, there's also a reciprocal gain to the borrower of that same amount. It's called forgiveness of indebtedness income or forgiveness of debt income. That money is treated as regular income to the borrower. So it's like insult to injury here. You may have to pay the lender a certain amount if you don't have anti-deficiency protection. Plus, the lender just wrote off the uncollectible amount, and you now have a gain of that amount to pay on your taxes. So you're going to have a tax hit too. So again, there were some things in 2008 through 2012 about that protected people when that would happen. But those don't exist as much anymore. So if you are considering going through a short sale, or if you are considering going through a trustee sale, you got to talk to a real estate attorney to go through that analysis that I gave. You got to talk to a CPA as well, because CPA may be able to help you say, well, look, you need to move this over here, do something else, because you're going to owe a bunch of money in taxes now, in addition to losing your house. So it's not great. The other part of this is, some people make the decision, I'm going to stop making my mortgage payment. I'm not going to pay this lender anymore because I've got anti-deficiency protection. And then the question becomes, well, what about everybody else? Like my HOA, and you can't mess with the HOAs. The HOA obligation, that remains. There's no anti-deficiency protection. The statutes that I mentioned, I think it's ARS 33-814, it doesn't work for HOA debt, HOA obligations. So they're going to get their money. So again,
well, I remember that too. Early in the short sales, people just stopped paying everything. Like, I'm not going to pay anything. And then they would look at, kind of let the dust settle, and they would look at everything. But now they've got a lien put on their property because of the HOA. They haven't been paying the HOA. And they're like, well, wait a second. I can sell this and maybe I can still walk away. And it's like, no. And the HOA can come in and take your house.
That's right. So it's So HOA obligations are personal obligations, meaning they can come after you personally, and they're property obligations, meaning they can throw that lien on your property and collect that way. So the set of CCRs that people sign or agree to be bound to when they purchase property, it's a pretty powerful document. So if you're not going to pay your lender because you've talked to the attorney, you've talked to the CPA, I think you got to keep paying the HOA. And again, that's probably a state specific thing, but I would imagine that every state requires you, or every state says, there's no anti-deficiency protection for HOA obligations. I just couldn't imagine there would be.
No, I mean, because the HOA still has to be paid. I mean, and I remember too, when during that time, some of the HOAs with the transfer fees and the capital improvement fees, all of that, it was crazy, because we go to get this thing under contract as a short sale, and then the title company would order all the HOA documents, and then they would want that $380 some right away, but not at the close.
Yeah.
And then the deal would fall apart because the bank wouldn't accept the short sale. And then we were all back to square one, and that the HOA would say, okay, the next deal, there's another $386. Who's paying that? And these sellers were like, what is going on?
It was wild. It really was. And now, I think if you're going to do a short sale now is the time to do it. Because we don't have this glut. We don't have this same level of intensity. I don't think we ever will again. I hope not. But if you got to do a short sale, people know how they work a little bit better now. They know the process. They understand the process. It's a little less. It used to be, everything was in books that attorneys read, and attorneys would have to tell you. Well, now there's some public information out there, and there's videos like this. It's much more understandable for most people. So then they just have one or two questions after they've been able to figure out what's really going on. The other questions that we get are, how long does this take, and that sort of thing, and that's pretty standard as well. I mean, usually 30.
What's the answer to that? What do you say? Yeah. How long does it take?
So to get a short sale accomplished is pretty quick. You just got to get it under contract, and maybe you need to stop making your payments so that the lender is taking you seriously that you need a short sale. But that's something you'll have to decide with your attorneys and your family. But the short sales can actually happen pretty quickly. A month, 2 months, those types of things, because again, the banks aren't inundated. When it comes to a trustee sale, if you've made the decision, short sale is not for me. And there are some situations in which short sales are a potential disaster. And I can get into that. they're very limited, but there are some situations. Typically, you're going to go 3 to 4 months behind. The lender's going to go, okay, we've tried to collect from you. You're not paying.
Mm-hmm.
They'll go and slap a notice of trustee sale on the property. They'll record that notice of trustee sale as well. Within that notice of trustee sale, there's a date that's at least 91 days in the future. So if you think about it, the trustee sale process is 3 to 4 months behind plus another 90 days. That's about 6, 7, 8 months.
Mm-hmm.
So that's kind of your window. And in that amount of time, if you've lost your job or something like that, you can start rebuilding your cash, etc. And frankly, you can consider doing the short sale within that amount of time as well. But again, 3 to 4 months behind, then another 90 days. That's the 6 to 8 months of a trustee sale. Short sales quicker. Deeds in lieu of foreclosure. So a deed in lieu is sometimes considered by some of the lenders. You have to get permission. They have to accept it. The deed in lieu is the legal equivalent of you mailing your keys back to the lender.
Right.
The lender, this is the funny part. Back in 2008, 2010, those years, people would just they would sign a deed. Here you go, lender. Here, your property's back, and here's the keys, and here's the garage door opener. The lenders would say, yeah, right. We don't have to take these back. So the deed in lieu, just like a short sale, is like this accommodation that the lender can provide. So you're not guaranteed a deed in lieu. Do I like deeds in lieu? Sure, they're fine. They shortcut that 3 to 4 months behind plus the additional 90 days. But again, as with the short sale, you need language in that deed in lieu that says we're waiving our right to pursue any additional amounts. So that's it. Deeds in lieu are tough to get. You have to get that language. And so, and the credit savings is similar to a short sale. So it's not like it's doing you that much good. So what we typically suggest to people is at least try a short sale in most circumstances, unless you fall into one of these weird circumstances I can tell you about. At least try it. If it doesn't work, then you know what your option, your remaining option is, and it's to allow the property to go.
Right. I was going to say, a deed in lieu is harder. Do you think a deed in lieu is harder to get done than a short sale?
I do. I think it's much harder. Yeah. There's some lenders that are kind of, the smaller lenders that, they're a little more accommodating. They're more willing to consider other options. That's where you might be able to get a deed in lieu. You're certainly not going to be able to get a deed in lieu if you have a second mortgage, et cetera, because they may be taken subject to that second mortgage.
Right.
So
well, I mean, and they want the most amount of money for the property, to repay the loan that they took out,
Yep.
And you're gonna do that with a short sale.
Usually, yeah, that's right. Now, I'll get into the situation. That short sales could be a bad idea. So, under our statutes, again, 2.5 acres, single family home, and what we look at is purchase money. Well, I had a situation where a borrower paid off their loan. They took out $500,000 loan. They paid it off 5, 6, 7 years down the road. They then go and take out another loan secured by the property. Mm-hmm. So now we're dealing with the situation that was not a purchase money loan. Mm-hmm. We've now exposed ourselves to a potential deficiency if there is one. And so what you don't want to do in that particular situation is ask for a short sale, because the lender starts looking at, oh, you took this extra money out on such and such a date. Oh, this is a non-purchase money loan. Oh, you don't have anti-deficiency protection. We're actually going to do a judicial foreclosure here. And so by doing a short sale, you're sort of saying, hey, look at my situation over here. You just, it may be better in those situations just to be like, you know what? I'm not going to say anything to this lender. I'm not going to alert them to anything. I'm just going to let them do this trustee sale. And if they do it by a trustee sale, you're good. They can't pursue the deficiency. So there's some strategy involved in all of this.
Well, that has to do with like that conforming and non-conforming loan, right?
Exactly. Yep.
Yeah.
Exactly.
Yeah. I mean, there's so much involved in it. And what's interesting during that short sale time when it was crazy and all the short sales were being done, I felt like the banks were really just trying to get through it. So some of the stuff, the dollar amounts that I saw banks approve, I was like, wow, all right, let's roll with this. And then as it came to a close, the things started kind of trickling, I felt like banks were being a little bit more stern. They wanted more money. I feel like less short sales were actually being approved, and they wanted to kind of take properties back a little bit more. And I saw them. I mean, I had probably 4 different offers on this property, as a short sale. And the bank kept saying, nope, 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 we won't take that money, or we won't take that amount. And they wouldn't give me an approved price. And they just came in and they just took it. And they put it back on the market for more money. And it was crazy. I was like, I don't understand this, because if we could have gotten that money, we would have, and it just sat.
Yeah. There's just so many bizarre things that lenders were or were not doing. I just remember saying, you're a perfect candidate to do a short sale.
Yeah.
And they'd come back and say, I tried the short sale, lender wouldn't accept it. What do I do now? And I'm like, well, trying to short sell it, but it's probably going to go to foreclosure. The fascinating part is that we still run into title issues several times a year, from 2008 through 2012, where, hey, I thought my lender, gave me some sort of forbearance, or I thought this loan went away and was paid off. Well, now my lender's coming out of nowhere because there's equity in the property, and they want to pursue this amount from me. And
really?
Yes. And so so we're not out of the woods in terms of seeing some of these weird title issues that came up from that era. It is quite the era for sure.
Oh my gosh, it was so crazy. I've not heard of that. I've not heard of anybody like having any issues with title or anything like that.
Yeah. So people, what was happening was, hey, I did this, refinance back in 2008, or, rate and term refi to kind of help me out a little bit to lower my payment every month. And then they tacked on a second mortgage or whatever, but they told me that didn't really count, or they told me that they got rid of my home equity line and I didn't have to pay it back. Okay, cool. Well, where's the paperwork that says that? Well, I don't have that, but so it's just missing documents. There's missing pieces. And, some of the lenders, they don't exist anymore, or they don't exist in the same capacity. They've merged or taken over, whatever. And so getting this paperwork, and in a lot of these situations, we have to go to the court and say, here's what we think happened. Here's what the recorded documents actually say. Judge, we need a judicial declaration. It's called a deck action from you, saying whether this thing has survived and what amount is owed. And it's pretty wild. Yeah,
that's crazy. So what else are you seeing when it comes to foreclosures right now on your end, with anybody wanting to do them, needing to do them? So funny. Tina from the Cromford Report is calling me right now.
You gotta take that call.
I know. So funny.
Yeah. Well, if you want to get her,
no,
we have a three-way here.
Right, exactly. Cool, right? Tina, tell us about the foreclosures now.
Exactly.
Put her on the spot.
She's going to be very unimpressed with she's going to say it's not a big deal.
Right.
When you the foreclosure rate is 0.25%, and it just went to 0.50%. Well, we're still under 1%. It doubled.
Right.
But that's not a true measurement. So I think I may have mentioned this. We're seeing people who are just sort of kicking the tires. We're seeing some people who, again, went through some lending issues back in a few years ago. We're seeing some people who bought maybe new builds, and the builder still hasn't sold out, and so they're not getting the valuation that they'd hoped, and so becomes a little bit of a short sale. So it is, again, hey, I've got a small deficiency here. I don't want it to get any bigger. What do I need to do to get this thing sold and not owe a bunch of money? And again, it's the language that we talked about, the lien release for sure, and then the deficiency waiver, because again, we don't know if short sales or the foreclosure statutes actually give you protection in a short sale. We think it probably does. Can't imagine a scenario under which you go to a judge and you say, hey, judge, I thought I was doing the right thing. I did this short sale. My lender's still pursuing me. Even though I had anti-deficiency protection, could have just walked away. I think a judge is going to say, yeah, that doesn't feel right either. But in any event, we're getting those kicking the tires. What's the time frame? How does this work? How does this look? But it's not a big percentage of the consultations that we do. It's not a big percentage of the practice that we have. I'm not super worried about it. I'm fortunate to have learned what I learned in 2008 through 2012.
I feel the same way.
Yeah, but it's like, we're going to kick that down to somebody else. I don't, as an agent, if I was a real estate agent, I'd say you might want to go somewhere else, because I don't have the patience.
Again, I will usually send them to an attorney, because I I mean, I can ask a lot of questions and I can get some information and kind of give them my opinion, but it's not legal advice, which is what they need, when they get to that point. But unless I still think, again, with what I've seen, unless you're being transferred and you absolutely have to sell your property, but if you lost your job or did something and you've owned the property for a little while, you're going to be okay. If you haven't, and it's just been a few years, I still think there's ways for you to keep that property. Could you get a renter in it? Could you get a roommate? Could you get, there's a lot of other ways for you to save that property without having to let it go. Still. So, I mean, those are the kind of the options that I will usually talk to people about, is that, what other things can you do?
Yeah, I'm glad you brought up kind of the agent's role in this, because we would see unfortunate situations. So this is just sort of a good reminder for everybody.
Mm-hmm.
Real estate agents aren't there to give you legal advice, and they really can't, because their license doesn't allow them to do that. Mm-hmm. So what we would see back in the day, back in 2008 through 2000, whatever, was agents saying, hey, you got nothing to worry about. You've got anti-deficiency protection here, or this short sale approval letter is just fine. Just move forward. And it's like, oh, no. So I'm glad you referred people to at least have that short sale approval letter, or at least have that discussion. The other part that we ran into was agents who would say, hey, go buy another property and then dump your old one. And it's this sort of buy and bail scenario, which, could be construed as mortgage fraud. And
right.
in some instances, and that was a scary proposition, because some agents were like, what's the big deal? And it's like, you got to work through this. you gotta, there's some issues here for sure.
Well, and nobody that I worked with personally, but I know, because I heard, you hear through the grapevine, like I know people that like they sold the house to a family member, so they didn't have to do a short sale, or they did the short sale to the family member, right? Family member then bought it. They did the short sale, waited however long, and then bought it back, the same house back, and they never moved. And it's like, that was a big fat no too. And it was like, I remember the documents they had to sign off. This is the seller or is the buyer. Are you related to them?
Right. The arm's length transaction. Yeah. Oh gosh, this is triggering the arm's length affidavit. I know. Yeah, this is triggering a lot of.
I know. I know.
We may need a therapy session after this.
Right. I know. Cause it was, I mean, I remember people calling me and they're like, oh man, I probably need to sell my house, but I am probably a short sale. And I'm like, look, you have nothing to be ashamed of. Nothing. Yeah. You and a million other people are going through this exact same thing. You did nothing wrong. No, it wasn't to the fault of anybody. And it still isn't. It's life happens, situations come up, the economy, people are freaked out about some of the things that are going on right now in the world. And it's like, that's nothing we can do. Nothing. I mean, you just have to make the best decisions that you can with what you have, but that might be different now. And it might be different in, 2 months, but you can't, I don't think that anybody can get really caught up in the weeds with, oh my gosh, there's another housing crash that is coming. Foreclosures are coming. Again, are foreclosures going to come? Of course they're going to come. But are we going to see 2008 again?
No.
I don't see it.
I don't either. No, I don't either. We're in a much, much different position here in the state.
And the loans that lenders are giving now are so different than what they were before. I mean, most of these loans that they were giving were stated income, interest only, adjustable rate mortgages.
It's funny you mentioned that, because I think I moved here in 2003 or 2004, something like that. So I've been here 22, 23 years. And I just remember wanting to buy a house. And, hey, you got pre-approved for X amount. And I'm like, but what? Like, I just started my job. I don't make that much money. No, you can get up to this amount. Yeah. And I'm like, well, I'm not going to borrow that much.
Right. So, I know. My husband and I did the same thing. We owned our house before, all of that happened. And during that time, we thought, maybe we should move, get a bigger house, to do the whole thing. And I remember talking to a lender and they're like, oh, I'll just do stated income for you, interest only. It'll be fine. And I just remember sitting back thinking, and my husband and I talk about it. We're like, yeah, I don't know that I feel super comfortable with that. And so we didn't do anything.
Yeah.
and we just stayed in our little house, and everybody, around us kind of lost their house, and we saw everything happening, and we just stayed hunkered down, and it was a tiny little house, but we could afford it and it was okay.
But that just goes to show you that was not people's fault. That was
No.
this is what was being sold to us.
Right.
And many of us, bought into
Right.
it. And
It was, it was crazy. It was crazy. Well, I know that the foreclosures are talked about a lot. I thought it would be fun to look at this article. We talked about this just a little bit. And again, to the titles on the title here, they are beginning to rise, right? So this is where foreclosures are beginning to rise. And I thought it would be interesting to look. So foreclosure starts increase nationwide. A total of 68,794 U.S. properties began the foreclosure process in Q1 of 2025, up 14% from the previous quarter and up 2% from a year ago. States that had 100 or more foreclosure starts in Q1 of 2025 and saw greatest annual increases include Kansas, up 117%, Delaware, up 58%, Oklahoma, up 45%, Utah, up 42%, and Wyoming, up 33%. So those major metros with a population of 200,000 or more had the greatest number of foreclosure starts in Q1 of 2025, including Chicago, New York, Houston, Texas, Miami, Florida, and Philadelphia and Pennsylvania. So that was interesting. Because again, I feel like when you look at foreclosures, oftentimes you'll go, oh, it's in this general region of the, country potentially. And that is not really what's happening. It's there. I mean, Chicago to New York to Houston to Miami. It doesn't seem to be on the west side too much, but yeah. So it's interesting. Bank repossessions rose a quarter over quarter. California had 944 REOs. Texas, Illinois, Pennsylvania, and Michigan. So that was interesting to see. Back up here, it says among the 225 metropolitan statistical areas with a population of at least 200,000, those with the biggest foreclosure rates in Q1 of 2025 were found in Columbia, South Carolina, which is interesting because I feel like there's still a lot of people moving to South Carolina, Lakeland, Florida, Bakersfield, California, Riverside, California, and Chico, California. I have to say, I don't know if it's Riverside County or actually the city of Riverside, which is where I grew up. But Riverside County is one of the biggest counties that we have in the United States. I mean, it's huge. So I just think it's interesting to kind of look at that because, again, other places do have foreclosures and they are kind of rising. But I mean, in all honesty, I think the place that's going to see potentially a wave of foreclosures is Florida. With what's going on in Florida, which is really sad because it's not, again, back to the whole thing. It's not of any fault of their own. It has to do with insurance and what the HOAs are now having to do for all of the money to improve the buildings and do all of that, which is, it's really unfortunate.
That reminds me of a topic that I should probably mention when it comes to insurance. And so I gave you that scenario where the person has anti-deficiency protections. The lender can't pursue them. Well, one of the ways in which you can lose anti-deficiency protection is by committing what's called waste. Okay. You commit waste in one way by not insuring the property. So if something happens to the property, a fire, a hurricane, whatever it is, and you didn't properly insure it, guess what? You just lost your anti-deficiency protection. Now your lender can pursue you, and you're going to owe the lender a whole bunch because that property has gone into disrepair. So that is a very tough situation. We would see that on occasion, and it hasn't really come up in quite a while, but that just reminds me of those Florida situations where people can't get insurance. Some of the other places, some places here in our state are there's some insurance issues or there's some elevated fire concerns, and so yeah, I mean you got to get.
Well, I mean, how do you, as a homeowner, how do you know if you're properly insured?
It's it's having the conversation with the expert, the insurance broker, the insurance agent to match your policy against what the lender requires in your deed of trust. But having that conversation is really imperative.
Yeah.
And again, it's getting harder to get insurance in many places. And so
So with that, here's a question with that. So say you're in an area like Florida where you can't get insurance, so you have to have the state insurance, right? And there's a hurricane and it wipes out your house again. Would you lose value, whatever that is. Is your lender going to see the state insurance as enough insurance?
It's a great question. Yeah, I don't know. That'd be something that I would be concerned with if I lived in Florida and the same anti-deficiency laws apply or they're similar, which I suspect they probably are. I don't know that for sure, but yeah, it really depends on how they define waste or the concept of waste. Whether they have anti-deficiency protection in the first place. Maybe it doesn't even matter. Maybe you couldn't qualify for anti-deficiency protection, so the waste issue doesn't matter.
Sure.
And you're on the hook no matter what. But yeah, that's a potentially scary proposition that says, hey, I've otherwise got protection here. My lender can't pursue me because I live in Arizona or California or whatever. But guess what? I've got such a minimal amount of insurance here because this area is hit. And now, yeah, I think they could be on the hook.
Yeah, that's crazy. I mean, all of these things are just, it's scary because you just don't, a lot of times you don't know it until it's too late.
Yep.
Yeah.
I think that's why, I think that is why people are starting to call about these issues. That's why I think I think people are trying to be a little proactive. What happens if that's largely the call I get is, hey, I've been trying to sell. What happens if, it's like, I'm glad you called because here's what you need to know just in case. You need to talk to me or any real estate attorney. You need to talk to a CPA. These are the things you need to look out for. You need to make sure you have good insurance if you can, that sort of stuff.
Because I've had some sellers too, and it's down to the wire and they're like, look, if I take this money, if I take this offer, what are my net proceeds? And you look at it and you're like,
none.
Yeah, none.
You owe
none, or you owe $100 or something like that. So I haven't had a lot of those lately, but I remember, and I'm sure that there's more people out there that are having that conversation about if I take this offer, what does that look like as far as net proceeds to me at the end? Because you've got to be, and it would be a conversation that I would be having with the seller if I knew they had just purchased their house, 2 years ago.
And that's right. And we're seeing it also in certain largely outskirts. Mm-hmm. And I feel like that's where it started the last time, but it was these outskirt areas where there's a lot of new construction and, or a lot of new development where people are just getting in and that sort of thing. That's where it feels like it's where we see it the majority of times when people call over the last few months. It seems more outskirtish than.
I don't know if they are telling you this, but are they selling their house because they're having to move? Are they not liking where they're living? Like, what is kind of the preemptive?
Sometimes it's medical. They want to downsize. They want to go live closer to family. They want, so there's a whole gamut. They lost their job. They're getting transferred, all sorts of stuff.
Yeah. Because again, I talk about when, if you're going to buy and you're having a hard time finding a place that in an area that you want to be, like you really want to, if you really, really want to buy a house, like you might have to look a little bit farther out, to buy the first time, but you have to know what that looks like too. You have to know that you're going to have the drive and you're going to have, some of the things that maybe you didn't want to have, but if you really, really, really want to buy, that might be what you have to do for a little bit.
Waiting
but again,
for the
hang on for 5. It's right now. You better you have to know now you're going to hold it for 5 to 7 years.
Yeah, I'd agree. And you're going to wait for the restaurants and the gas stations and the other amenities that people like. But that's the trade. That's a good trade-off for some people. Right.
And it might, the house might be a little bit farther out, but you'll own something. And in 5 to 7 years, you're going to be happy that you did it.
Yeah. Look at Queen Creek, Arizona. When I first moved out here, that was way too far. Nobody wanted to move out. Nobody would consider, oh my gosh, that's too far. And had you bought that at that time when everybody said it's too far, you've done well.
Really happy right now.
Exactly.
Really, really happy. I know it. And everything that's going out there is crazy.
Yeah. Yeah. They
It's
got a lot of
crazy.
nice stuff.
They
But the
do.
traffic, now they have traffic, right? I
I
mean,
know.
they actually have traffic problems now.
I'm sorry. I'm still going to say what I say every time when anybody brings up traffic to me. I'm like, I grew up in Southern California. You cannot tell me that we have traffic.
Yeah.
You'll never convince me
Yeah.
that
No,
our
it's,
traffic is terrible.
I remember the first time coming from Arizona, driving in LA, and it was like, this is painful.
Yeah.
You know, it took me an hour to go 8 or 9 miles and
Yeah.
stop and
Every
go
day.
something. Yeah. No,
Every day for no reason. My
yeah.
kids have now started saying what I felt like what I said when I was a little kid. They would say, "Mom, why doesn't the person in the front just drive?" And then there wouldn't be traffic. And I'm like, you would think that would be a really easy solution, right?
Yep. Somebody needs to invent that or
Right.
fix
I know.
that.
Just, hey, person in the front, just drive.
Yeah. Yep. Yep.
Because
But
that's
you know
what I would
what?
always think when I was a little kid in traffic. I'm like, why is the person in the front going so slow?
Or you get to the front or wherever the problem was, you're like, there was no problem. There was
Yeah,
like,
there's no problem.
yeah, somebody got scared because of a gust of wind. It's the weirdest thing. It's
Well, and that's what it is in California, because literally you'll be driving and it's just traffic, and there's no reason. Zero. None.
well, everybody's trying to get to the beach, I guess.
Oh, something.
You know,
Something.
the good thing too about Arizona is, and speaking of roads, and if you do have a longer commute, because you do buy out and further away, we got good roads here. I mean, you're not falling in potholes like where I grew up. I mean, literally these potholes would take out the front end of your car. I mean,
That's so funny. I have a client that is from Michigan as well. And so he grew up there, but he's lived in Florida and the whole thing. And he drives a ton because he doesn't love to fly anymore. So he drives and he says the same thing. He's like, oh, I'm always so grateful when I get to Arizona because the roads are so nice here.
Yeah. Yeah. Even driving back from California, if we drive to California or whatever, you know, it's bumpy, and then boom, you hit Yuma and you're like, oh, this is cool. Back on, yeah, and we can go a little faster.
Right. Oh, that's so funny.
Yeah.
Oh, all right. Well, Patrick, as always, I thank you. Thank you. Patrick's information is down below. So if you guys have those questions, reach out to him. He's a great person to reach out to for that. He is who I send people to. So everybody have a great weekend. Thank you for joining us and we'll see you next time. Bye everyone.
Thank you, Sean.
Yeah.